Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. The US president could announce higher tariffs on India within hours as Donald Trump ramps up pressure on Delhi to stop buying Russian oil. The Swiss president takes her bid as well for lower levies directly to Washington. Elsewhere, markets struggle for direction as weak US services data clouds the outlook for Fed policy. Plus, Novo Nordisk, Commerzbank and Siemens Energy reporting this hour. I'll be speaking to the Siemens Energy CFO. Wednesday, the 6th of August, and we are not short of earnings to bring you this hour. We kick off out of Germany with Siemens Energy. Can it reinforce confidence in its turnaround? These are results for its fiscal Q3. It has revenue at 9.75 billion euros. The estimate was for 9.73 billion euros. So an ever so slight beat there. It sees full-year composite sales at the high end of a growth of 13% to 15%, and it's saying that it's going to hit the top end of that guidance because of strong US demand. So we're going to be speaking to the Siemens Energy CFO later in the programme, very shortly indeed, right here on Daybreak Europe. But I want to stay first in Germany and switch over to Commerzbank. It's got a high bar to beat. The stock already up 106% year to date. It's the biggest gainer on the stock 600 banks index. And what you're seeing is for second quarter revenue, 3.02 billion euros is the number. The estimate was for 2.99 billion euros. So a beat there. It says it's applied for a 1 billion euro share buyback. It sees net income for the full year of about 2.5 billion euros, having previously seen about 2.4 billion euros, so upgrading that just a touch. And net interest income for the full year coming in for about 8 billion euros. That is its expectation. Of course, it's been boosted by Germany's fiscal expansion and UniCredit's interest in it as well. And we're going to be speaking to the CEO, Bettina Orlopp, about all of those numbers as well. That's in the opening trade just after 7 a.m. London time. Let's check in on your broader markets. As things stand, we've got futures pointing higher on both sides of the Atlantic this morning. You had a bit of a spanner in the works out of the US economic data yesterday. The ISM services print reflecting the stagflationary quandary in which the Fed finds itself. So it had been quite a cautious start, but we're picking up a bit of pace here. In the Asian session, you've got a bit of help from the car makers on the optimism of lower auto tariffs from the US. Japan's chief trade negotiator heading over to Washington. So the MSCI Asia Pacific Index already up 0.25%. And if we flip over to the cross-asset picture, you have got euro dollar currently at 115, the 10-year at 422. Brent actually on the front foot today after 4 days of decline. So $68 a barrel is where we're at. But it's gold that's on the back foot today. Weaker 0.2% at $3,373 a troy ounce. Now, let's get back to the trade story. Shuttle diplomacy, really. President Karen Keller-Sutter arriving in Washington for a last-ditch appeal to lower that 39% tariff rate that was set by US President Donald Trump. Let's get more now with Bloomberg's Paula Danecker, who joins me now from Zurich. Paula, good morning. Just tell us, do we know who the Swiss president's meeting in Washington and what she hopes to achieve?
Good morning. Yeah, we don't know yet. We are waiting for news from the Swiss president every second. We know she arrived in Washington yesterday evening and is trying to facilitate any meetings. To our knowledge, there were no meetings set up beforehand, and she's really just hoping to meet officials there who might be busy with other talks. As we heard, they are speaking to India at the moment. So it really is unclear at this moment whom she is meeting and what she can achieve. But clearly the goal is to make sure that those tariffs of 39%, which would otherwise come into effect on Thursday, will not hit that badly.
Yeah, going without any meetings, perhaps a sign of the desperation to lower that 39% tariff. But I suppose what concessions could she offer that aren't too politically costly back home?
This is quite the question. I mean, there are several things that are under discussion from what we have heard. There was a meeting with business leaders on Monday, but to our knowledge, there are no more investment programs that could be proposed. Novartis and Roche have proposed such already. There's also, the president said several times that he's very unhappy about high drug prices, but it's nothing that the Swiss state can influence directly. It's just something they can ask Roche and Novartis to change. On the state side, there are other options, for example, buying more energy or weapons from the US, as we have seen with other countries. So that could be something under discussion. Another thing that adds hugely to the trade surplus of Switzerland is its gold refinery. The question really is if that is something that the US would Switzerland want to change, and what can be done there short term.
All right, Bloomberg's Paula Danecker watching those negotiations happening in Washington, but out of Zurich, we thank you for that update. Now, let's get back to the earnings story. Of course, we just had breaking lines from Siemens Energy. It says it's expecting to reach the upper end of its full-year guidance because of surging orders for its gas turbines and its grid equipment. You've got this boom in global electricity demand. So looking at net income for the fiscal third quarter coming in higher than expected, the company reporting strong orders in the US and therefore helping it shrug off the direct hit from tariffs imposed by President Trump. I'm pleased to welcome to the programme the CFO of the company, Maria Ferraro, who joins me now for more. Maria, thank you so much for making time for us. I know you've got a busy day ahead of you. Let's just start with this upgraded guidance for the second quarter. You've paid the dividend earlier than expected as well, so things are looking positive.
Yes.
How are you going to be able to weather the uncertainty that lies ahead for the rest of the year?
So good morning, Lizzie, and thank you for having me this morning. Yes, we're very pleased with our Q3 results. As you mentioned, really a record order intake quarter for us. And yes, with that market momentum and that positivity, we see ourselves at the upper end of our guidance. And also, just as a reminder, we raised our guidance at the half year. So yes, weathering the storm, but that's because we really see positive market momentum across all of our businesses, and we build on that resilience.
And just talk us through how tariffs have actually affected your global supply chain so far.
Well, of course, we're all impacted by the tariff situation, and certainly I won't even speculate as to where it will go. But what we do know is, of course, we've indicated that we see around 100 million so far. This has impacted our figures, and that's fully embedded. Of course, with the agreement with Europe, we see an additional 5%. That also we see it perhaps around the mid-double-digit mark in terms of impact for us for the rest of the fiscal year. But Lizzie, that's taken fully into consideration for our guidance. And with that, still with that impact, we see ourselves at the upper end of our guidance range.
OK, and are you currently importing parts that are used in your US gas turbine production from outside the country? Is that under review?
Well, of course, yes, of course we do. But again, we have diversified supply chains. We operate in over 90 countries. So we really try to utilize that supply chain resiliency that we have. And as you indicated, certainly our numbers are speaking for themselves this quarter, where we see that strong momentum building, not just in the US. And of course, the US remains a strong market for us. And certainly we saw, 35% of our order intake this quarter with that record order slice comes from the US. But really, it's about the resiliency and the strength that we see in other markets, like, for example, right here in Europe. So overall, we see that, yes, it will impact us, but it's manageable.
Well, yeah, just before we turn to Europe, given that strength in the US, are you still therefore planning to expand your US operations?
Yeah, thank you for that question, Lizzie. We have been expanding and we continue to expand. We indicated just recently that we've spent over $500 million just in the past few years in the U.S. We continue to see spending there. Looking at our growth, we need investment to fuel our growth. We indicated that this year we'd spend about $2 billion of CapEx, really focusing on that tremendous growth. And yes, just this quarter, we spent $500 million. So, of course, we continue to see that growth. Also in the U.S., we continue to invest there. We have plenty of production facilities there, over 12,000 people and growing in the U.S., so still a strong market. But again, it's about our resiliency and our global footprint that continues to make these numbers really resilient in light of some of that volatility.
So turning to that, I know that the German economy minister just paid Siemens Energy a visit. What was the main message that management wanted to convey to her?
Yeah, of course, we are here in Germany, and of course, this is our home market, and we see strength in that home market, and we're very confident that, of course, the German government sees, certainly in the energy sector, that we continue to grow here and invest in Germany. And this is the key message is that, of course, we need an environment in which we can continue to grow, and we see that growth here, and we continue to invest in Germany, absolutely.
Yeah, Germany has this plan to build up to 40 new gas power plants with the first auction of that capacity scheduled before year end. I wonder, are you going to be equipped to deliver the gas turbines fast enough if all of the orders go out after the auction?
Right, Lizzie, I mean, this is what I was mentioning so far. We really have tremendous demand in certain parts, and certainly for the next couple of years, we see that we're sold out in certain parts, especially when it comes to gas turbines, or, for example, in grid, we're now booking orders well towards the end of the decade. So our message would be, please hurry up. Of course, the global market doesn't wait for us, but we're very pleased to be able to, of course, build, various gas turbine plants here in Germany. But of course, the name of the game is speed, speed, speed.
Well, do you think there'll be new momentum for price rises when the tenders for the German gas-fired power plants finally get the green light?
Well, this is exactly what we've seen so far, Lizzie. We've seen tremendous pricing power. And of course, one of the key figures that I like to talk about is our order backlog. We have 136 billion of order backlog. And clearly what we see in our backlog is margin expansion on the back of that pricing power. And certainly we see that prices continue to rise in certain parts of our business, predominantly, for example, in gas, as you mentioned. And of course, it's a very favorable pricing environment. And we see that expansion of a margin in our backlog. And that's important for us because essentially it gives us visibility not only for this year. I mean, Lizzie, I have 95% of my revenue in-house already, but it also gives me visibility in the years to come. For next year, I have 80% of my revenue in-house. So for us, it's laser focus on operational execution and excellence.
OK, we talked about Germany. Just going back to the US, clearly the winds have changed when it comes to political support for offshore wind. How's that support holding up in Asia and Europe more broadly as well?
No, it's a very good point, I think, Lizzie. Look, like I mentioned earlier, we are global, and certainly when it comes to wind, one of our key markets is right here in Europe. And we're very proud that this quarter, for example, we have strong order growth in the offshore wind power business, where we booked 2 large orders in Poland. So again, we do see that strength. When it comes to the US, we've always indicated that, of course, we have a couple of projects ongoing there. And we see some additional, because again, they want all the energy that they can possibly get. It's high demand. So we see some repowering contracts also in the US. When it comes to Asia, we also see growth there. Again, we are very fortunate to see growth across our businesses and actually across the globe. And this is the type of market momentum that we see that fuels that demand for electricity, and therefore, as you can see, our quarter results, that we do see very positive momentum in that regard.
All right, Maria, it's always a pleasure to talk to you. Thanks so much for making time for us. That's the Siemens Energy CFO, Maria Ferraro, with a spring in her step, I might add. Let's have a look at what else we've got on the docket for today, shall we? At 7 a.m. London time, we get German factory orders. Then at 6 p.m. London time, it's the US 10-year bond auction. And then before the US market open, a couple of household names reporting earnings. We've got Uber and Disney as well. Can their international businesses offset the domestic weakness is the big question. And you can get a roundup of all the stories that you need to know to get your day going from today's edition of Daybreak. Terminal subscribers can find it by going to DAYB Go on your terminal. But coming up right here on Daybreak Europe, Donald Trump says that he's ready to impose higher tariffs on Russian energy buyers as US Special Envoy Steve Witkoff arrives in Moscow. We'll bring you the details next. Plus, later in the programme, the Dutch retail giant Ahold Delhaize is set to report its earnings, and I'll be speaking to the CFO, so stay with us for that conversation as well. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, US President Donald Trump says that he's readying more tariffs on Russian energy buyers, including India, in the next 24 hours.
Well, I never said a percentage, but we'll be doing quite a bit of that. We'll see what happens over the next fairly short period of time. But we'll see what happens. Yep. You know, they have a meeting tomorrow. We have a meeting with Russia tomorrow. We're going to see what happens. We'll make that determination at that time.
Meanwhile, Special Envoy Steve Witkoff has arrived in Moscow for meetings with officials there. This is according to the Russian media. And it comes ahead of Trump's August 8th deadline for Russia to reach a truce with Ukraine. So let's get more now from our Bloomberg News Desk editor, Balazs Pence. Balazs, thanks for being back with us. I hope you can round all this up for us. You've got Russia considering an air truce with Ukraine to try to head off this threat of secondary sanctions. Is that going to be enough of a de-escalatory concession for President Trump?
Well, that is the question everybody in diplomatic circles is asking, Lizzie, right now. Russia has indeed signaled that it's willing to go into a partial air truce, which would halt missile and drone strikes on Ukraine. One insider in Moscow described that to us as a gift to President Trump, who's been seeking a breakthrough in this war. What we have heard is that this is a significant development. This would be a significant gesture, although it is a highly calculated one. Remember, the Kremlin is under pressure from President Trump's threat of secondary sanctions aimed at countries still buying Russian oil, which puts further pressure on the Russian economy. And at the same time, we also heard from Kremlin insiders that this does not represent a fundamental change in war strategy. President Putin's aims remain unchanged, and his ground forces continue to make progress in Ukraine. And an air truce certainly would not affect the ground war. We also have no idea how Ukraine would receive such an offer, whether they would be even willing to go into an air truce. And the big question, the big test is how President Trump would react to an offer like that, whether a partial concession would be enough. Since the beginning of his presidency, he's been talking about putting an end to this conflict. He wants a genuine, lasting peace agreement. It's very much unclear whether a partial concession like this would satisfy that demand. As his envoy, Steve Witkoff, heads to Moscow for what seems like last-minute negotiations before the deadline kicks in, we'll be watching very closely about more signals coming out from that relationship.
Yeah, there certainly seems to be a big gap between an air truce and a full end to the war. But interesting that Donald Trump seems to be overlaying trade with geopolitics now when it comes to this tariff policy. But if we look at the rest of what he's been announcing, he says that he's getting very close to a deal with China and that these chips and pharma tariffs are coming in the next week or so. So just, Balazs, get us up to speed on all the latest developments here in the past 24 hours.
Well, Liz, it certainly has been a whirlwind of trade pronouncements from President Trump over the past 24 hours. One of the most immediate things that we can see is the diverging paths the president is taking with the two biggest economies in Asia. On the India case, he's taking a very hardline approach. As we just heard, he's threatened substantial tariff increases and accused Delhi of fueling the Russian war machine by continuing to buy oil. Clearly, on the Indian side, that was met with indignation, defiance. They thought it's highly unfair and unjustified to treat India like that. What we're hearing is they're trying to put together a multi-pronged approach to try to contain the fallout. On the China relationship, on the other hand, he has said that it seems like they're very close to extending a trade truce, which was set to expire on August 12th. So perhaps that's a little bit of a respite for the global economy when it comes to the stability of the world's most important trade relationship. And like you said, sectoral tariffs are still potentially coming in a week or so, the president said, in the pharmaceutical and the semiconductor industry. We're not exactly sure how this would work. And with country-specific tariffs set to kick in this week, it certainly seems like there's more turbulence ahead for global trade.
OK, Bloomberg's Balash Pence, we thank you so much for that update. Well, let's stay on the subject of war, because Israel is said to be weighing a full military takeover of Gaza, despite concern among military chiefs that such a move jeopardizes the release of the remaining hostages. An Israeli official told Bloomberg that the plan would also face considerable international opposition. Prime Minister Benjamin Netanyahu is due to meet his security cabinet to finalise a strategy. Well, coming up on Bloomberg Daybreak Europe, Donald Trump honing in on his pick to replace the Fed Chair Jerome Powell. We'll bring you more on who's on the shortlist. That's next. This is Bloomberg. 6:25 a.m. in London. Welcome back to Bloomberg Daybreak Europe. Now, the US president says that he wants to pick a new Fed governor this week to replace Adriana Kugler, who, of course, announced her resignation on Friday. President Trump also revealing that there are now 4 people in the running to replace Jay Powell.
Fed governor. I'll be making that decision before the end of the week, and we'll either decide on one for permanence or the 4-month period, the term. There's a term of about a number of months. We have a couple of candidates. Everybody wants it, okay? It's not a couple, but we've narrowed it to a couple of candidates. And we've also, we're looking at the Fed chair, and that's down to 4 people right now.
Let's get more now with Bloomberg's Valerie Teitel. Val, so Scott Bessent doesn't want the job. We knew about the 2 Kevins. Who are the other 2 candidates?
That's the big question for the market, because I think that's the thing that the market is most worried about, that we get some wild card candidate that we've never heard of in this seat, unsure about how he'll conduct, he or she, I should say, could conduct monetary policy. I think that was the big takeaway yesterday. They have narrowed it down to 4, but 2 of those still remain unclear. We know about Kevin Warsh. He spoke about that actually pretty directly on the interview with CNBC, saying he's very good, but sometimes they're very good until you put them into the seat. So there were some questions, I guess, over Kevin Warsh's loyalty to Donald Trump. I think that's the one conclusion that the market has taken as well. The other Kevin being Kevin Hassett. He's currently the National Economic Chair, someone who's been very loyal to Trump, has been a key part of his economic agenda, not just this time around, but also in his first term. But the big questions are leading forward on whether this pick will be Trump's pick for Fed Chair, or whether he'll leave that seat maybe open for someone else next year. So a lot going on here, and maybe more candidates that we don't know about being considered.
And just very briefly, we've got the ISM services data. Where does it leave the Fed cut bets?
Well, the ISM services data did come in surprisingly weak. It neared contraction, but a lot of the attention actually, Lizzie, was on the employment subcomponent. That showed a very weak number, one of the worst readings for the employment subcomponent since the pandemic. It did lead the equity market to lose a lot of its gains. Yesterday, S&P 500 was down over 0.5%, but the Fed cut bets remained unchanged. We're still pricing in around 90% for the Fed cut meeting in September. So maybe the market is just the takeaway is that we've priced in plenty enough for now.
All right, Bloomberg's Valerie Teitel, we thank you so much. Val will be back at the top of the hour with the opening trade, but coming up right here, one of the world's largest food retail groups, Ahold Delhaize, expected to report a robust set of earnings for the second quarter. We'll speak to the CFO next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. The US president could announce higher tariffs on India within hours as Donald Trump ramps up pressure on Delhi to stop buying Russian oil. The Swiss president, meanwhile, takes her bid for lower levies directly to Washington. Meanwhile, markets struggle for direction as weak US services data clouds the outlook for Fed policy. Plus, earnings from Commerzbank announcing plans for €1 billion buyback as second quarter net interest income beats estimates. Well, a very good morning if you're just joining us. Welcome to the programme. Checking in on these markets, and you've got futures pointing higher on both sides of the Atlantic. You've already seen Asian stocks off to a positive start thanks to the optimism that car makers are going to get lower tariffs from US President Donald Trump, the Japanese chief trade negotiator heading off to Washington to try try to make that happen. And if we flip over to the cross-asset picture, you've got 422 on the 10-year, euro-dollar at 115, Brent, having been on the back foot for 4 days now, actually up at $68 a barrel, and gold trading weaker at $3,372 a troy ounce. We are bringing you now some breaking earnings out of Denmark. We can go straight to the pharma giant Novo Nordisk, the Ozempic maker, of course. It also makes Wegovy, and we've got a hothead with its sales coming in at 19.53 Danish kroner. The estimate was for 19.2 billion kroner, and so a beat there. They say, the CEO is saying they want to ensure efficiencies in the cost base. They're taking measures to sharpen the commercial execution. They're looking at second quarter pre-tax profit of 33.81 billion Danish kroner. The estimate was for 34.56 billion. So a miss there. Wegovy sales coming in at 19.53 billion. The estimate was for 19.2 billion. So a beat there. But net income for the second quarter, 26.5. The estimate was for 27.01 billion Danish kroner. So pharma, of course, under pressure from President Trump to cut prices. The shares in Novo already down 50% so far this year. We're going to be speaking to Novo's CFO at 9:20 a.m. London time, so you don't want to miss that interview. Next up, we stay with pharma, but head over to Germany for Bayer's earnings. They have second quarter sales coming in at 10.74 billion euros. On terms of adjusted EBITDA margin, 19.6%. The estimate was for 17.2%, so beating there. But second quarter adjusted EBITDA coming in at 2.11 billion euros. Then we also have earnings coming from Ahold Delhaize out of the Netherlands and the supermarket retail sector, of course. There are currency headwinds at play here, but second quarter expected to be robust. What you're seeing is second quarter adjusted operating margin of 4%, beating the estimate of 3.96%. Adjusted operating margin, it says for the second quarter, 3.7%, so just shy of the estimate of 3.79%. But the second quarter composite sales, excluding fuel, coming in at 4% positive. The estimate was for 3.7%, so they're a beat as well. And we can now bring you a deeper dive of these numbers with the CFO of the company, Jolanda Poots-Bijl, who joins me now. Thank you so much, Jolanda, for making time for us. I'm just looking through the top lines of these earnings, and it seems pretty positive so far. You've got your free cash goal and buyback reiterated, I think. Is there anything that could change that focus?
Well, good morning, Lizzie, and thank you for having us. As you stated, we've delivered a solid quarter in rather dynamic circumstances, so I'm quite proud of that. And we were indeed able to reiterate our outlook. We're well positioned. We started out in the first half year. You called it robust, we call it solid, but I think we agree it's a good start of the year. So I'm quite confident that we will be able to deliver on the guidance given and the ambitions that we've given ourselves.
And let's dive into the US business, because I know that you get the bulk of your revenue there, Jolanda. It looks like sales across the industry have slowed in the second quarter. So is your sense that you're riding that wave better than your peers?
Well, our Growing Together strategy is centered around the customer and around growth. So what we started out last year is investing in our prices, 1 billion in 4 years' time in the US only. So we're really driving that growth with delivering value. And if we look at customer sentiments at this point in time, it is all about value. We sometimes say the customer is on the hunt for value. The second thing that we see in our customer base is that the online proposition is really important, especially when it's personalized and when there are certain discounts to gain. And if you look at our online growth, it's the 5th consecutive quarter that we have double-digit online growth. So a few elements that drive that growth, part of our strategy, and what for me was an important milestone this quarter because online growth is part of that strategy. But as you know, it was unprofitable and dilutive. And this quarter we reported that we reached a milestone of online profitability. So although still dilutive to the overall margin, we delivered 4%, as you said. It's no longer a negative. So I think we're progressing well. That drives that growth also going forward.
Well, Jolanda, you talk about customers on the hunt for value. In the US, we've just seen the one big, beautiful bill being passed. Are you worried that that's going to reduce incomes for lower earners and that could harm your business?
Well, what we've seen in the one big, beautiful bill is that overall we don't expect any direct impact on our business. If we look at, for example, the SNAP paragraphs in the One Big Beautiful Bill that will go into play somewhere around 27, 28, it could have a slightly negative impact overall in society. Our SNAP penetrations are at a low time rate since COVID, so I don't think the impact will be directly very big for our business. And we are monitoring developments very closely because first and foremost, we want to serve our customers the best way we can. And especially those customers with household budgets under pressure. Again, our focus on lowering prices, expanding our own branded products, which deliver value and high quality products. These are the elements that we put into play to help consumers.
But given that you're in that retail space, as a kind of barometer of the macro picture, are you seeing a change in the trajectory of food inflation?
There are slight upticks, but if you compare it with the previous periods behind us, it's rather normalizing and stabilizing. But there is a slight uptick, so we are carefully monitoring it. We don't give any inflation projections ourselves, but we carefully monitoring the developments going on.
Okay, really interesting. We've also seen the dollar, of course, dropping against the euro. That's weighed somewhat, I think, on your sales and profit. Does it change the way that you're thinking about capital allocation?
No, our capital allocation is reiterated in our guidance. So we continue our share buyback program as agreed upon. We have the promise to the market of growing year-on-year dividends that we reiterated, and also our capital expenditure, because we also invest capex to drive that growth, opening up more stores, stepping down on our remodels, and that is all reiterated and going forward.
And Jolanda, there had been reports that you'd inquired about acquiring Carrefour. Is there any truth to those reports?
Well, we always do deep analysis on all competitors in the market, and that's as far as I could go in this perspective.
All right, Jolanda Poots-Bijl. I tried the Ahold Delhaize CFO. Maybe you can tell us later. Thank you so much for making time for us this morning. Let's now go back to the Novo earnings that we just brought you out of the Danish pharmacy space, of course. Wegovy sales beating estimates ever so slightly, 19.53 billion Danish kroner, as opposed to the estimate of 19.2 billion Danish kroner. That seems to be the line that stands out for me, but let's speak to an expert on these now. We can go to Bloomberg's Copenhagen reporter, San Vass. San, what are your key takeaways from these results?
I mean, the main takeaway is that Novo is facing a lot of challenges, especially in the US, which is its biggest market. And amongst those challenges is compounding pharmacies producing copycat versions of its blockbuster weight loss drugs, and of course also intensifying competition from rival Eli Lilly. And that is starting to show in Novo's sales growth. Novo already came out last week and forecast or guided for lower sales and profit growth for the rest of the year. So analysts have had the chance to update their estimates, and that will explain why Novo also could beat the estimates even if sales growth is growing. But the shares did take a massive hit last week because of this news. I suppose the upside to that is that Novo has probably taken the worst of the hit already, but today investors will really be looking closer at the details and any hints from Novo Nordisk around how it's dealing with those challenges.
OK, so competition from other drug makers, a major issue here for Novo. Meanwhile, it's got a new CEO on board to try to get the company back on track. How does he intend to do that?
Yes, Marcia Mike Duster is his name. He's a company insider, has been with Novo for more than 30 years. As you say, he is meant to be the man to turn Novo around, and especially he's tasked with improving commercial performance in the US. He officially only takes on the role as CEO tomorrow. So instead it will be the outgoing CEO, Lars Fruergaard Jørgensen, who've got the honor, if you like, of presenting the second quarter results on what will be his last day as CEO. And then from tomorrow onwards, everyone will be following closely what Mr. Duster, what his next actions are. He's already hinted a bit at cost reductions. He says he wants to execute faster, but we're still lacking details, and for sure we'll hopefully find out, maybe not more today, but from tomorrow.
All right, Sanna Vasby, thank you so much for that crucial context. Our Bloomberg Copenhagen reporter, who's just taken a moment for us from writing the T-Live blog, which is really excellent. It's diving into the detail of those Novo earnings. So do check it out at TLIV Go on your Bloomberg terminal. Now to some other corporate headlines this morning. Bloomberg has learned that OpenAI is in early talks for a secondary share sale that could value the company at around $500 billion. Sources say that investors, including Thrive Capital, are looking to buy shares from current and former employees. OpenAI was previously valued at $300 billion after a funding round led by SoftBank back in April. Elsewhere, shares in Supermicro plunged in late trade after the company cut its sales forecast and forecast quarterly profit falling short of estimates. The stock has surged this year on optimism that it'll benefit from demand for AI products, but the revised outlook raises questions about Supermicro's ability to capitalise on that. And AMD shares fell in extended trading after it warned that a return to the crucial market in China is still a work in progress. That overshadowed a generally upbeat forecast for its AI business. US curbs on chip sales to China were relaxed last month, but AMD says that its export licenses are still under review. And in Asia, Cathay Pacific says that it's ordered 14 Boeing 777 planes, confirming an earlier Bloomberg scoop. It's the first time that the Hong Kong-based airline has bought planes from Boeing since 2013. The announcement coming as Cathay reported a small rise in first-half profit. Well, those are some of your top stories this morning. Coming up, we'll be diving into these earnings with Viki Farmaki out of State Street Global Advisors. We'll digest the latest bank earnings so far. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:46 a.m. here in London, and we've had a slew of earnings already this morning, not least from the banks. Commerzbank unveiling a buyback of as much as €1 billion and slightly lifting its profit outlook. The German lender now expecting to achieve a net income of about €2.5 billion this year, compared to a previous estimate of about €2.4 billion. But it's amid a sea of positivity, shall we say, for the banking sector in general. And with me now to digest it all is Viki Farmaki, Senior Equity Research Analyst at State Street Global Advisors. Good to have you back, Viki.
Good morning.
So, as I say, it's been a solid quarter for banks.
Absolutely.
But the good numbers don't seem to be enough for investors. They still seem to get punished. Have we reached peak optimism for the sector?
Well, a couple of things. First of all, it has been a very good earnings season for the banks. And what we're seeing is that management teams are reiterating their guidance for the full year 25. So everything is in plan. And we've seen good earnings growth, 4 to 5%. But as you said, the bar is now much higher. I mean, banks have delivered 40% total return this year, 170 over the last 2 years, outperforming the market by 35%. So you can see in-line numbers, some big, sharp moves. And there have been some headwinds that the sector has to face as interest rates go lower and we see some normalization. But there's some offsets to that. I mean, net interest income has been much more resilient than expected. It has met analyst expectations. It's only down slightly year to date.
Yeah.
And you can see loan growth picking up. That will be an offsetting factor as we go through the year.
Well, on the net interest income point, there's divergence across the euro area,
Absolutely.
right? Some are doing it better than others.
Yes.
What's the best kind of strategy? Who's executing best on that?
Yeah, absolutely. There's a number of factors affecting net interest income. One of it is, do you have long duration assets, short duration? Now you want to be on the longer duration with the interest rates coming down. Hedges are in place to supporting the income. And UK banks have a lot of hedges in place. They're rolling off to a higher yield, and that will support their net interest income quite well. And you're also seeing loan growth. That's going to be a supportive factor. We've seen from the latest ECB data that loan growth is ticking up, both households and corporate. And even in countries that have been slightly weaker, Germany and Italy, the lending surveys point to pick up in demand. So I think the macro helps in that front, and we are seeing the GDP growth outlook numbers have come up slightly during the year. That's going to support the net interest income.
Will you take us to Germany? If we can go from the monetary to the fiscal, Commerzbank clearly supported by the fiscal boost there. Do you think that that's kind of a sugar high, or do you think that that's a tailwind that's going to lead to, durable margin improvement for a series of years?
Well, it's a big amount, right? So I think there is going to be an impact, but it's going to be, we've had the first wave through the excitement of the announcement. Now we have to see the impact coming through on investment. So that's going to be a long-term effect, but it's not going to be as pronounced as the day one announcement. But certainly we have seen the GDP forecasts as the consensus has come up throughout the year, and our consensus is looking to avoid recession. It's looking at 1 to 1.5% growth going forward in the euro area, similar in the UK. So I think there is a long-term impact to come from that, but it won't be the same sort of excitement as we had in the day one. But certainly it is helping the bank earning numbers.
Well, the other theme that touches Commerzbank is, of course, M&A.
Absolutely.
I wonder, is the market pricing in more cross-border European M&A over, the coming quarters?
I think now the market is in a wait-and-see mode. We've seen a lot of the big announcements, and now it's more of the wait-and-see mode. I mean, banks are generating a lot of capital, so certainly M&A will stay on the table, but it's likely to be more bolt-on. That's what most management teams are guiding us to. Bolt-on, where it makes sense to have this diversification revenue growth, so you're not dependent on the net interest income. So I think in terms of the big announcements, we're in a wait-and-see mode for now to see how they process, but there's a lot of smaller deals to take place because there is a lot of capital being generated in the European banking system, and that's been a big theme that we have seen throughout the last 2 years.
The other thing that we're hearing a lot from banking CEOs is about cost control.
Absolutely.
Do you think that there's a lot more room on that to get more efficiency?
I think the banks are definitely working to get more efficient. They've come a long ways.
Yeah.
If you see the cost-income ratios have come down significantly in the last.
But can they go further?
I think there is room to go further, and there's a lot of technology that's being implemented to support that effort. Of course, they're also working on boosting the revenues to improve the cost-income ratios. But I think the technology will certainly help in improving the efficiencies of the European banks that was so much needed in order to improve their profitability.
And just finally, volatility really helped some of the investment banks in the first half of the year. We, of course, have got so many tariff headlines coming through, you'd think that the volatility is not going anywhere. But if that fades, how can they, keep up those revenue streams in the second half?
Absolutely. I mean, volatility has stayed higher than we all expected and has supported certain parts of the business. If that volatility reduces, the idea is that other parts of the business should be able to benefit. As we get more stable environment, there's a lot of money sitting on the side, a lot of investments that corporates want to make, and they're waiting for that certainty. They're waiting for the volatility to come down. That should help those businesses. And I think there is a pipeline of revenues to come once the volatility settles down.
All right, Viki, lovely to have you around the desk with
Thanks
me this early morning. Viki Farmaki, Senior Equity Research Analyst over at State Street Global Advisors. Just a quick clarification on something that we said earlier, an update on second quarter earnings from ADNOC Gas. Some of the figures flashed last hour were incorrect, but let's bring you the correct ones. The company reporting second quarter net income, which beat estimates, coming in at $1.39 billion. Second quarter revenue was down 1.9% on the year to $5.96 billion. And its EBITDA came in at $2.26 billion, up 8.1% on the year. Well, we've got plenty more coming up on the programme, all the charts you need to set you up for your trading day. So stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. In our last few minutes together, I just want to bring you some charts to set you up for your trading day. Looking back at that data that we got out of the US yesterday. So starting with ISM services, and you can see here in the white line, you had employment at its lowest since March. But at the same time, you had prices paid the highest since 2022. So put it all together, and the conclusion is stagflation, which isn't that just what economists said tariffs' impact would be on the US economy? Surprise, surprise. But flip the board over, and you can see the other number that Donald Trump was keeping his eye on very closely, and that, of course, was the trade balance. So the trade gap narrowing to its tightest since 2023. But interestingly, that comes more down to imports than exports, and therefore suggesting that tariffs are driving this weighing on demand, not necessarily just trade flows. Now, while we're on the macro picture, I want to bring you that Treasury auction that we got yesterday as well. It was the $58 billion auction of three-year notes. It tailed on weak investor demand, and you can see that here, so we keep an eye on that. But we've got all of these charts for you to dive into on your Bloomberg terminal. Just go to GTV Go and you'll be able to find them. But stay right here on Bloomberg TV, because we've got a couple of key interviews for you. Earnings season continuing apace. We'll be speaking to the Commerzbank CEO, Bettina Orlopp, on their latest results. That's just after 7 a.m. London time on the opening trade. Ollie, Val and Critty will take you all the way to the market open. Stay with us. This is Bloomberg.